Walker, you're the buying a business guy. Like, how come you are also, doing film production over here, and you're investing in real estate, and like, how do you do all this stuff, and how does it all make sense to you? Are you investing in the stock market, or is it all private markets, or what's going on? Today, I'm going to break down the 3 asset classes that I think about when I'm thinking about where to spend my time to work actively and build, and also where I invest the earnings from the businesses that I own, okay? My name's Walker Deibel. I am the Wall Street Journal bestselling author of Buy Then Build. If you don't know, Buy Then Build is the single best-selling book in the history of the world on buying existing small businesses. And so it's one of those things where, buying businesses rather than starting from scratch is a great way to be an entrepreneur, right? Like, you don't always have to build from scratch. And so the thing is that, financial freedom, okay? We always think about like, oh, it's coming from, cash flow and all this other stuff. And I have enough cash flow, that's, coming from, whatever, my assets or mailbox money or whatever, so that I can go live my life, right? But here's the thing. We think about that cash flow, but the actual wealth is being built on your balance sheet, okay? So if you're just going to, a W-2 job and you're working for somebody else and you're bringing that income in, sure, you might, have a primary residence or, whatever it is. But the thing is you're not necessarily building the balance sheet other than, investing in the stock market. So I always like to think about like, okay, the only path to real wealth is business ownership in one fashion or another. So what are the different ways that we do this? Okay, so the first one is just simply businesses, okay? The richest people in the world are entrepreneurs, right? Or they're in private equity and they're buying businesses. So I'm either, buying existing companies, buying additional companies to go from there, or if I'm investing, I've got probably 24 minority positions in other people's businesses because they're the right team to execute on that. They're taking, personal loans in order to, build their company and all the rest of it. Those are the things that I like to see, right? So I'm either buying businesses, I'm building businesses from scratch, or I'm investing in other businesses. These are assets that go on your balance sheet that build, either cash flow or, long-term wealth on that balance sheet. The other is, it's the one that we've come to love over the decades prior, right? So it's real estate, okay? And so, I never was the guy that was kind of like swinging the hammer on the weekend because, I was kind of swinging the hammer during the day, right? Like, so I wasn't buying properties and trying to flip them while working a W-2 job during the week. I was buying companies and, putting everything I had into them because I always viewed the upside potential of businesses to be greater than real estate. I know a lot of entrepreneurs that have built fortunes with businesses that they own. And I find that a lot of those people were investing in real estate, but a lot of the people that were just investing in real estate, there was sort of a ceiling, right? And so real estate is kind of a wealth accelerator once the business is sort of generating all that money. Now, that's not to say that, there's a lot of ways to do this, right? There's short-term rentals, there's ground up, there's, buying multifamily, buying retail, doing fix and flips and all the rest of it. This is a whole thing, just as this is a whole thing, right? And so that's a different video, the 3 A's and all the other things. Over here is interesting. So this is intellectual property, okay? So IP is, a lot of people think about like, they'll find out that, I've been producing films for a little over a decade, and they want to know like how that makes sense. Like, how come you're buying businesses and you're producing films? And I explain, I'm an executive producer, right? And so it's one of these things where we anchor around an IP that's already there, just like when I buy a business that's already there, or you do a value add acquisition on real estate. So I'll buy an IP that's already there. We'll license it. We'll have the team together, whatever it is. And as an executive producer, it's all about investing, raising capital, keeping the marketability of the film intact, getting the thing exiting, and being on the producer team for sort of like early feedback loops. But I don't, I'm not doing any of the creative control, right? I have no creative control. I don't really, well, sure, I would love it, but cause it sounds so fun, but I'd mess it up, right? You got to bank on, sort of like the operators, right? Of the ones that are in there doing it, because that's their, special formula. And so, you can, invest in films or whatever it is. Like right now, I'm a big investor in the 007 video game for example. So 007 in this example is a intellectual property, okay? Buy Then Build is an intellectual property that I wrote, okay? This YouTube channel is intellectual property that we're building, right? And so it's one of these where, and to be clear, the YouTube channel does not generate any money, at least not yet, but like, you know, it's like whatever. But the thing is like, you know, IP is one of these anchors, right? And buying existing businesses is one of these anchors, and buying real estate is one of these anchors. And so a lot of you know that I've made big investments in real estate, and that's where, you know, a lot of so this is where my balance sheet is sort of coming from in terms of how I think about the asset classes. This is also like the private capital markets, right? Like these are the things that are, you know, getting outsized returns, okay? So the other thing I want to highlight here is that if you look at this, what I really like about, you know, working in this space is that if you think about, you know, intellectual property and all these things, I mean, you're talking about like really intangible assets, right? And then when you go the other direction and you think about real estate, you know, you're talking about something that's actually extremely tangible, right? Like that's why you get it. This is an extremely tangible asset. It's literally a building, okay? And so the thing is that like when you compare, like when you look at IP, like usually there's nothing there, right? Like a lot of us get very uncomfortable when we're, you know, maybe acquiring a website for the first time, because it's like there's nothing there. It's just like a website on the internet, right? And, you know, or, you know, you're building, you know, you've got a film or whatever. And so the thing is, it's like there's nothing there, and then you make something out of nothing, but it's just like information, okay? The tangible is, you know, it's got sort of the opposite kind of reality where, you know, the downside protection is actually very high because you have a physical, tangible object. These are the things that banks really, really love. These are the things that banks really, really dislike. In fact, this is often called venture capital because you can't get the money from the lenders, right? Which is why I've always liked businesses, because you don't, you know, you can start from scratch. But the thing is when you buy existing businesses, you can go to the bank, right? And so this usually tends to be a mix between the tangible and intangible, okay? And the reason why is because, you know, things like people, processes, systems, like the magic engine that makes everything move is a really intangible thing, right? It's an intangible asset. A customer list is an intangible asset. You know, the tangible might be the machinery that's like making the products, or, you know, maybe there's inventory, or, you know, whatever it might be. And so you've got this mix of the tangible and intangible together coming in businesses. And so it's one of these things where you can create value and you can acquire value, you know, in all of these different varying degrees of tangible and intangible assets, okay? And so these are the classes in which I've always thought about, you know, how do we build things of value, and then, you know, where do we invest in order to, you know, build up the balance sheet and ultimately gain that financial freedom. If you're looking at acquiring an existing company in the next 1 to 24 months, okay, this is why I started Acquisition Lab, okay? We anchored in world-class education. We built a vetted community, which is, I mean, the single best intangible asset of the thing, and the sort of the special sauce that really makes it great. Only about 25 to 30% of applicants are extended an invitation to enroll, which is really elevated our group. We've acquired. The group has acquired over 200 million in transactions in the last, you know, 24 months. It's a huge percentage close rate of the group. We've got all the tools and resources and supplier network and all the rest of it. So make the leap. Consider buying existing business rather than starting from scratch. We'll see you on the inside.